But overall, what's going on here is bond jitters seem to be back. And which is interesting because remember last month, or actually was a week ago, the latest inflation numbers actually came in pretty good. Both the CPI and the PPI came in lower than expected, and inflation actually had, in fact, been as low as it's been in quite some time. And yet, the bond market's gotten pretty jittery. What's going on? Well, it's not just about inflation anymore. And again, this is a good example of how the focus of the markets and the bond market in general can shift as to different data points or concerns about fiscal or monetary policy. And that, I think, is what's going on this week. Part of what's happening with bond yields this week is there was a Treasury auction, an auction of U.S. Treasury bills, and it was met with weak demand. And of course, when demand for a new Treasury bond auction is being seen, what that causes is a rise in yields in order to basically get those bonds sold. So that's part of what's going on this week, was a weak Treasury auction, a weak auction of Treasury bills that did occur midweek this week. And then the other part of what's going on is the fiscal and monetary policy uncertainties. In particular, what's kind of shifting in the narrative is, you may have heard, I guess overnight, Congress, the U.S. House of Representatives anyway, the House side of Congress, did pass the so-called Big Beautiful Bill, part of which, of course, extends the tax cuts from 2017. Well, what's interesting about that is being looked at in the markets, bond market in particular, is not particularly good news. The reason being, by extending the tax cuts, plus, of course, this thing about no tax on tips, no tax on overtime, the thought is, well, that's going to generate more budget deficits. What's interesting about that is it's that classic case that we've seen now for many years where